If you are a Forex trader, then I need you to come closer. I will be exposing the top 6 deadliest trendline errors that could be costing you thousands of dollars in profit right now. So these costly mistakes can happen to everyone. So in this video, I will be showing you how to identify these errors and also how to avoid them to keep your trading game strong and very profitable. I know you are tired of misinterpreting trend lines and watching your trades end in terrible losses, from drawing trend lines wrongly to ignoring the critical market signals that comes with using trend line. So these mistakes are something that even the experienced and the seasoned traders get wrong. So in this video, I will be sharing with you the tips and the tricks to help you avoid these common deadly errors. You are welcome back to my channel. I am your host, Baby Forex. If you are ready to turn those trading errors into profit opportunities, be sure to smash that like button and subscribe, and let's get started. So the first thing is, let's educate ourselves about what a trend line really is. So a trend line is a straight line that connects two or more price points and extend into the future to act as a line of support or a line of resistance. And in Forex trading, trend lines are used to visualize the direction of the market trend. So whether it's a bullish trend or a bearish trend. So the first error on this list of 6 deadliest trend line errors is the error of trend or time frame overlaps. So trend line has a lot to do with using the right trend in the market to plot them. So by the time you use the wrong trend to plot a trend line, it simply means you'll be trading from the wrong time frame without knowing, right? A lot of people make these mistakes, and that is why you need to make sure the first thing you want to do is be sure that you're on the right trading time frame you should be on. This depends a lot on the type of trader that you have. If you're a day trader, you are a swing trader, or a scalp trader, you need to know the time frame you need to be on to draw the right trend line on there, right? So for example, on the H1 on this chart here, you would see what looks like a bullish trend on this chart. This is a bullish trend. And by the time you go to the M30 time frame for a day trader, you make use of the H1 and M30 a lot of times. So you may have a bullish trend on the H1 whilst you have a different trend entirely on M30. So H1 here is a bigger picture, so you may have a bullish trend. By the time you flip to the M30, you may see that currently the market is doing a downtrend on the M30. So you need to be sure that you're on the right time frame and also on the right trend. So for example, here we have a bullish trend on the H1. The H1, you may be able to spot a trend like this, whereby you have a trend line that looks like this. You may do something like this, and this would qualify as a good trend line. But by the time you flip this over to the M30 time frame, you would see that the current trend on the M30 will be a different trend, which means you have overlapped the time frame or the trend. So let's quickly get on the M30 time frame and see the trend that is going on. So the current trend, as you see here, the current trend that you see is a downtrend. The M30 currently is a downtrend. So on a downtrend here, you should be looking at a downward trend line. You should be looking at a downward trend line. So which means your trend line should look something like this. So if you are not careful enough to be sure that you're on the right time frame, you would end up drawing and using the wrong trend line for your trades. So when you're able to spot this downward trend line on the M30, which is currently a downtrend, you are able to draw the right trend line and you are looking for sells instead of looking for buys on the H1. So if you are looking at the H1, which is a uptrend, a bullish trend, you may be tempted to look for buys. But when you look at the current trend right now on the M30, you see that you have a downward trend going on, which means you need the downward trend line, which helps you to look for sells. If you also flip all the way to the M15, you would notice that the trend has already switched on those low time frame. You can see the M15 here also tells you you have a downward trend going on. You have a downward trend going on. You can see we have a plain downtrend on the same NZD/USD. So downtrend on the low time frame, but you have a bullish trend on the high time frame. So this is what happens when your time frame or your trend overlaps. So the first error is caused by using the wrong trend or the wrong time frame to plot your trend line. So the first step, you need to watch out for that. So the second error that is caused by trend line is what I call the minimal touch error, which means for a trend line to be a valid trend line, you must be sure that it connects at least 2 points and extend into the future. So from the first definition I gave up from the start of the video, I told you a trend line should connect minimum of 2 points. So a lot of people draw trend lines by simply connecting just 1 point. So something like this, when you do something like this alone is not a good trend line. So your trend line should connect at least 2 points, minimum of 2 points. So when you do something like this, it becomes a good trend line. It must connect 2 points at least, right? Something like this is a good trend line. So we need to watch out for that as well. Let's draw another one. So your minimal touches on a good trend line should be at least 2 points. So something like this is a good trend line. So when you have something like this, you connect minimum of 2 points. The first point right here, the second point right here, right? 2 touches, you are good to go, which means when price comes back to this level here, you are able to buy once again by using this trend line, because this trend line has been confirmed to be a good trend line. So you need a minimum of 2 touches on the bullish trend. Your trend line should go in line with the trend. Likewise, on the bearish trend, you should have a trend line that goes downward, and it must connect minimum of 2 highs. On the bullish trend, it should connect minimum of 2 lows. Bearish trend, it should connect minimum of 2 highs. So that is really what it is. You should connect minimum of 2 points. So this error also, a lot of traders make this error by drawing the trend line wrongly. So you must make sure you do not draw your trend line wrongly, and you must make sure that it connects minimum of 2 points and extend into the future. So the next error on the list is what I call the out of range error. Out of range error. And this is basically an error that happens when your trend line does not go into the range of the current move, right? So for example, on the chart I have on the screen here, if you are looking to short, if you are looking to sell in this market, because obviously this is a downtrend and you are looking for sales, your trend line should come like this. You should have a trend line that looks somewhat like this, right? So this very place here, the current price is right here. This is the current price right here. So you need a trend line that goes into the range, and this is the range you are looking at. So this here becomes the most important range in this market, because this is the most recent move that happened, and you are looking for sales within this range. So if you have a trend line that is printed out of the range, it means it is not useful. Sometimes you will see trend line that looks way out of line, something like this, right? So this trend line here is out of the range, right? The trend line over here becomes out of range. So the most important trend line is the trend line that is within the range of the moves you are looking at. So in a downtrend like this, you have 2 touches, which means it is a good trend line. And after these 2 touches, you can see price has given you a very good range. So which means you need price to come inside of this level to give you some possible shorts. So this very trend line here is inside of the range, and the first one up here is out of the range. So if you have a trend line from the high time frame, usually you get to make these errors. You make these errors when you have trend lines that is drawn from the high time frame. But when you're looking at the right time frame and the right trend, you are able to get the right trend line like this. And your trend line will be right inside of the most important level and the range. The range is very important because it tells you where to focus your attention. That you know that price is going to come to this level, and then you will look out for possible sells because you have a good trend line from there. So ensure that your trend line does not go out of the range. Your range is determined by the current move you have in the market. So the next error on the list is what I call the break and retest error. The break and the retest error. So a lot of traders also make this very mistake, because it looks very easy to overlook if you do not know exactly how bad it is. So you may have a trend like this. Obviously, this is a downtrend, and probably let's say you have a trend line that looks like this. Probably you're looking at something like this. So a lot of traders believe that when a trend line breaks, it means that the trend has ended and now you have a different trend. So this trend here is a downtrend. So at the break of the trend right here, a lot of traders will be looking to buy right here. So you would see a lot of people taking buys from that very level, taking buy from this very level, thinking that price is about to go all the way bullish. And before you know, price would continue bearish. And this is because trend lines are not meant to be used this way. If you are looking for reversals, you do not look for trend reversals by using trend line as a break and retest strategy. The most important part in trading is the ultimate support and resistance level. So over here, your understanding of the trend comes to play. So when you understand the trend very well, you will know that there is no good reversal until the key level in the market or the structure gets broken. So break and retest over here would be a bad trade. So taking a buy from this level would be a very bad trade because the structure has not been broken and the structure level is all the way up here. This is the structure level right here. So taking a buy from this very level here, thinking price is about to reverse all the way bullish, it's simply a bad trade. And this is a trade that you got by using the break and retest of a trend line. So trading this way can be very bad. So for as long as you're going to use the trend line, you need to pay attention to your structure. Your trend structure is very important. It tells you about the trend conditions in the market. So this here would be a bad trade by simply using the break and retest of the trend line to get into a buy. So you need to watch out for this error as well. So another error in this case is the error of plotting. I simply call this the plotting error. So if you are going to plot a good trend line in the market, you need to make sure that you are using two key points. You may use your wicks, the tip of the wick, or the candle bodies. And this is simply how you draw a good trend line. So you pick your trend line tool and then you use your candle. You may use the candle body or you use the wicks of the candle. So let's start with the candle body. You simply pick the candle bodies and then you use that to draw it and then you drag all across. So the first 2 points, the first 2 touches are the most important, right? So you have the first touch right here and you have the second touch right here. Likewise, you may use the candle wicks. You may place it right from the candle wick over here and then you use that to simply draw all across that way. So this also would qualify to be a good trend line. So you may use the tip of the wick or you draw it right at the candle body and you are good to go. Let's look at another example quickly on that. So we have something like this over here. And like I said, all you need is the first 2 touches. So you may draw your trend line at the candle wick. So 1, 2, you are good to go. You know, right here, you are going to look for sales, right? So you may use the candle wick and then you use that to draw your trend line. And another example, you may also draw a trend line. A valid trend line also could be something like this by using the candle body. So from body to body and then you drag all across. So you may do something like this, the first candle body right here and the second candle body right here, and then you drag across. This also qualifies to be a trend line, which means on the downtrend such as this, you are looking for sales if price comes to this resistance level one more time. So this is the 2 proven way you may use to draw your trend line. I know there are other ways you may use as well, but these 2 ways are really the widely used system you can use to plot a good trend line in the market by using the tip of the candle wick or by using the candle body itself. So the last error on this list is what I call the channel error. The channel error. So when you study trend lines are meant to be used in line with the trend. In line with the trend, which means if you have a downtrend, you should use a trend line to help you get sales. If you have a bullish trend, you should use a trend line to help you get buy. So when you start to use trend line as a way of channels, it may give you a lot of bad signals in the market. So you need to watch out for that. An example of what I mean is by simply doing something like this. You have a downtrend over here and you have your first good trend line that looks like this. And then you also did something like this. You also did something that looks like this. So which means you want to use this trend line here to get buy. So if you are going to apply this level over here just to get buy by using the trend line without confirming from structure first, you are going to get bad signals most of the time. I'm not saying this does not work all the time. This works just a few times, but most of the times it's going to give you a bad signal. So if you must use trend line as a channel, you need to make sure you check with structure, price structure first. So if structure confirms a good level and you have a channel that lines with the same spot, then you may have a good trade. So if there is no structure alignment at the same spot, then it simply means you most likely get a wrong trade signal. So trend lines are ideally meant to be used in line with the trend. So if you have a downtrend, you simply use a trend line to get sells. If you have a bullish trend, you use it to get trend continuation moves. So if you are going to use trend line for channels, then you need to be extremely careful. If you want to be successful long term, you need to eliminate trading system that does not give you a good chances of winning. So you need to watch out for this, and also be sure you watch out for every other mistakes I've mentioned in this video, because they are really going to help you become a better trader by using your trend line the right way to trade. I hope you found this guide on these 6 worst trend line errors to avoid in forex trading both insightful and helpful. So if you enjoyed this video, be sure to give it a thumbs up and leave a comment below, and I would love to hear also your experiences and any other trend line errors that you may have encountered in the past. So do not forget to subscribe to this channel and join our community of traders by following the links in the video description. Remember, trading is a journey, and learning from mistakes is a big part of becoming successful. Stay disciplined and stay informed, and keep refining your strategy every now and then, because learning is a part of success. Thank you for watching, and I'll see you again in the next video.